Hi everybody, and welcome to today's webinar on CDP reporting, preparing for 2020, hosted by Greenstone and CDP. So I'm David Wynn, I'm the Head of Client Services at Greenstone, and I'm joined today by Emily Pepper, who's the Senior Technical Officer at CDP. In today's half-an-hour webinar, we're going to be going through CDP reporting and, importantly, preparing for 2020. Because we've only got half an hour on today's webinar, I would encourage you to send questions through using the GoToWebinar app on the side of the screen. So if you click onto that, please do send through any questions that you have, whether they be company-specific or generic questions related to CDP or anything wider. We will be circulating recording of today's webinar and also an FAQ document around to attendees. So please do send those questions through and we can be sure to answer them for yourselves and others on the call. So for those software solutions to organizations to enable them with their sustainability reporting, whether that be sustainability software within their business, their supply chain, and through the investor ESG space as well. So we've been providing software for over a decade and have been a CDP software partner as well. So in terms of today's agenda, I'm going to be passing over to Emily shortly to take us through the CDP content for today. So looking at the reporting timeline, the important information about what's changed in 2020, and then some insights on the future of CDP reporting area as well. And then I'll close out today. We'll have a look at some best practice examples of reporting, some tips as well for reporters, and then some case study information as well. Great. So that leaves me to just pass over the presentation to Emily, who's going to take us through the first part of today's agenda, which is looking at the CDP reporting timeline and what's new for 2020.
Thanks, David. I'm just going to share my screen. Okay. So for my part of the webinar, I'm going to start by looking back on the growth of disclosure and results from 2019. The rest of the presentation will be focused on the CDP climate change questionnaire. So I'll just give you a brief introduction for those of you who are new to it. I'll then give you an overview of the changes for 2020, and I'll talk in a little bit more detail about some of the key changes. Note that I'm not going to be covering scoring details today, as the 2020 scoring methodologies have not yet been published. So firstly, a look back on the growth of disclosure. This graph shows the number of companies disclosing to CDP from the first disclosure cycle in 2003 to last year. As you can see, disclosure has been increasing steadily year on year, with a jump of over 1,400 more companies disclosing in 2019. Over 8,400 companies disclosed last year overall, 8,360 to the climate change questionnaire, 2,433 to water security, and 543 to forests. As a result of the increase in disclosure numbers, over 30% more scores were awarded in 2019, reaching almost 16,000 in total across the three corporate questionnaires. 8,240 individual companies were scored, with over 200 receiving a score for all three questionnaires. From the companies scored from A to D- for climate change in 2019, only the top 2% made the A list, equating to a total of 181 companies. From the company score for forests, 8 companies made the A list this year, also the top 2%. And the A list for forests was achieved in 3 of the 4 commodities, 4 companies for palm oil, 3 for soy, 3 for timber, but no A list responders for the cattle commodity. And from the companies scored for water security, 72 companies made the A list this year, which equals to the top 3% of the total scored. And this slide shows the 6 companies that achieved A's across the board for their actions on climate change, water security, and deforestation. For forests, this means achieving the A list in at least one of the commodities they responded to. Only 2 companies achieved this in 2018, Firmenich and L'Oreal, and we've only ever had a maximum of 2 in previous years. So this jump in 2019 is indicative of companies beginning to respond more broadly and thoroughly to environmental issues. As mentioned earlier, the rest of my presentation will focus on the climate change questionnaire, so I'll just give you a brief introduction. The climate change questionnaire consists of 14 modules listed here on the left. These modules are presented to all companies requested to disclose to CDP. Smaller companies and companies responding for the first time are eligible for a minimum version of the questionnaire, and in this case, they're presented with a subset of these modules. An additional supply chain module is presented to companies requested by one or more of their customers, also known as CDP supply chain members. And there are also additional sector-specific modules and questions for companies engaged in certain high-impact activities. So what are these high-impact activities, and what do we mean by sector-specific questions? CDP is committed to developing sector-specific questions covering all 22 TCFD sectors. And these are the sectors that will potentially be most affected by climate change and the transition to a low-carbon economy. Most of the sectors listed in the boxes here were launched by CDP in 2018, and this year we're launching 4 more sectors: capital goods, construction, real estate, and financial services. Companies in these sectors are presented with sector-specific questions, and these can be in the form of modified general questions, where the response options are specifically tailored to that sector, or additional questions. Also, this year, some general questions are removed for certain sectors. For allocating companies to sectors, CDP uses its own system for classifying business activities, and these activities determine which sector questions a company will get. So before I give you an overview of the changes in the 2020 questionnaire, I'd like to remind you of how we classify changes to questions. There are 2 types of change: minor change and modified question. The difference between the 2 is whether there's a change in the requested data. Changes like minor revisions to drop-down options and non-substantive wording edits are labelled as minor change, which means there's no change in the requested data. Any major revisions to drop-down lists affecting the majority of options or the addition or removal of columns are labelled as modified question, which means that the requested data has changed. This slide gives an overview of changes to the general climate change questionnaire. So this excludes sector-specific questions and the supply chain module. The total number of general questions in 2020 is 112, which is a net decrease of 2 compared to last year. Note that in practice, the number of general questions presented to a company will be smaller, as it will depend on their responses to the leading questions, which drive follow-up questions. As 2020 is another stabilisation year for CDP's questionnaires, we try to minimise the changes as much as possible. As you can see here, 80% of the general questionnaire has either no change or minor change. However, some modifications were necessary in order to remove repeating data requests, simplify and clarify the data requested, optimise question pathways, and improve alignment across CDP's 3 corporate questionnaires. This resulted in 4 new questions and 19 modified questions. With the addition of the new sector-specific questions for real estate, construction, capital goods, and financial services, the questionnaire now covers all of the sectors highlighted in the TCFD recommendations. For the last 3 years, CDP has been providing stakeholders with the chance to comment and feedback on any proposed major changes to the questionnaires via an annual public consultation. Most of the changes that we implemented this year were informed by the public consultation that took place in the summer of 2019. Thank you to all of you who took part. The feedback received is always incredibly valuable in shaping the future of our questionnaires. I'm not going to be able to go into the outcomes of the consultation today, but we have published a report on our website summarising the feedback we received and the changes that were made as a result. I'll now go through some of the key changes we made for 2020, focusing on new and modified questions. Some of the key changes to the 2020 questionnaire were in Module 2, Risks and Opportunities. The main driver for revising this module was the feedback received from stakeholders about the lack of clarity and perceived repetition of the information requested throughout the module. And this was assessed by CDP as a high priority to revise for the 2020 disclosure cycle. The module's been restructured, resulting in 2 new questions circled in lighter red and 4 modified questions circled in darker red. Questions 2.5 and 2.6 were also removed, and the relevant data points from these questions were integrated in Module 3. The terminology has also been aligned throughout this module. We previously used the word issues to collectively refer to risks and opportunities. However, we received feedback that the term issues was ambiguous in the context of certain questions. So we've revised the questions to refer to risks and opportunities instead of issues. And this doesn't change the essence of what's being asked, but it removes the ambiguity. Another clarification that we made is around the term risk management. We previously used to refer to both the risk management process as a whole and also when talking about responding to risks. And we've now clarified that risk management refers to the whole process, which includes identifying, assessing, and responding to risks. The first change worth noting in this module is a new question 2.1b, requesting companies to provide a definition of substantive financial or strategic impact. It's not really a new data point, as this was previously requested as part of a larger question on risk assessment process. The rationale behind splitting out this request into a separate question is that a company's definition of substantive impact is an important element in the risk assessment process, and it also provides the basis for interpreting all of the subsequent data disclosed on risks and opportunities. The most significant change in Module 2 is to question 2.2, now a single question requesting companies to describe their process for identifying, assessing, and responding to climate-related risks and opportunities. The main reason behind this change is to remove repeating data points and to enable companies to describe their risk management process and all related procedures in a holistic way in a single response. It's a merger of 4 2019 questions. The risk management process column is from former 2.2. The frequency of assessment and time horizons column are from former 2.2a, and the description of process column is from former 2.2b and 2.2d. Another module with key changes for 2020 is Module 3, Business Strategy. The main driver for revising this module was the revision of Module 2, as this module draws on the risks and opportunities reported there. The module has been restructured, resulting in 4 modified questions circled on the diagram. We've also tried to optimize the order in which questions are presented, so the numbering of most of the questions has changed. The terminology in this module has been aligned with Module 2. Questions now refer to risks and opportunities instead of issues. And with this, we've tried to make the link between this module and the risks and opportunities module clearer. As highlighted by the TCFD, an organisation's disclosure of how its strategies might change to address potential climate-related risks and opportunities is a key step to better understanding the potential implications of climate change on the organisation. The first change I'd like to mention is that question 3.1 has been modified to include an additional option on low carbon transition plans. A low carbon transition plan, in short, is a plan on how to transition the company to a business model compatible with a net zero carbon economy. And this is not a new request for the high impact sectors. Until this year, they were receiving 2 sector-specific questions dedicated to low carbon transition plans. The need for this revision became apparent when we received feedback that these sector-specific questions were perceived as repetitive and ambiguous. From this year, we're removing those questions for all sectors and instead are including this additional response option in 3.1. This removes the overlapping data requests, and it also allows companies outside of the high impact sectors to indicate that they've developed a low carbon transition plan. Here is probably the most significant revision in the module, question 3.1d. This is a merger of 2 questions from the previous year, a tabular question 2.5 presented here on the left, and an overlapping open text question 3.1c. The result is a question that focuses on how climate-related risks and opportunities have influenced a company's strategy, broken down by 4 specific areas of a company's business. And this question now helps to better demonstrate compliance with TCFD recommendations on strategy. Another change to note in this module is question 3.1e, which is a modification of 2019 question 2.6, presented here on the left, on the impacts of risks and opportunities on financial planning. 2.6 was perceived by companies as repetitive because financial planning for some of these elements overlaps, and the requirement to provide a separate description for each element was perceived as excessive. And now with this revision, companies can select all elements that have been influenced and provide a single holistic description, reducing the reporting effort for this question. The final module with changes I'd like to talk about in detail is Module 4, Targets and Performance. The main driver for revising this module was the poor quality of data collected, so revisions in this module were aimed at clarifying the requested data. In 2020, there are 2 new questions, circled in lighter red, and 4 modified questions. The main revisions to note here are a new question on targets related to low carbon energy, alignment of all target table questions, including the reordering and renaming of columns, and also a new auto calculation functionality has been added to certain columns. So I'll just show you the changes we've made to 4.1a to indicate the way in which we've restructured all targets tables questions. There are 3 new columns here, but none of them are new information requests. The column Target Coverage now allows companies to easily select what part of their business the target covers, and this was previously requested in the Please Explain column. This information is especially useful when your target doesn't apply to the whole company. Covered emissions in target year is a new column which is auto-calculated based on the information provided in columns covered emissions in base year and targeted reduction from base year. And covered emissions refers to the emissions that relate to your target in line with your selection in the target coverage column. For example, if your target covers 100% of your Scope 1 emissions, then the covered emissions will be your total Scope 1 emissions. There is also a new column, Covered Emissions in Reporting Year. So we now request you to provide the actual emissions in the reporting year. And this figure is then used by the system to auto-calculate the percentage of target achieved. And this was done to alleviate your reporting effort and so that there are no errors in tracking the progress against your targets. Another key change in the targets module is new question 4.2a. This was previously part of 2019 question 4.2 on other climate-related targets. The separation was needed to enable a more accurate and granular reporting of renewable energy targets. Most columns in this table are aligned with the other questions on targets. What is different is the additional columns on target type highlighted on the slide. And these help define things like the energy carrier, whether it's a consumption or production target, and also whether it includes all energy sources or specifically renewable sources. The final revision of note I'd like to talk about today is that we have clarified the definition of low carbon energy. This is relevant for all parts of the questionnaire that request data related to low carbon or renewable energy technologies. In addition to the clarification, all drop-down lists with low carbon and renewable energy technologies have been aligned as presented on this slide. Low carbon energy technology refers to fossil fuels fitted with carbon capture and storage, nuclear plants, and all renewable energy technologies, which can be presented as a generic list or as a more granular list depending on the question needs. So those were just a handful of the changes for 2020, but the other new and modified questions not mentioned today can be found in modules 1, 8, 9, 10, 11, and the supply chain module. Most of these modifications were made for simplification, clarification, and to reduce the reporting effort. 7 general questions have also been removed for the electric utilities sector in the emissions, breakdowns, and energy modules. These questions were either deemed not highly significant for the sector or they received a similar sector-specific question. There are also the new sector-specific questions for the capital goods, construction, financial services, and real estate sectors. To find out about all changes, including minor ones and the new sector-specific questions, please refer to the CDP questionnaire changes document, which is housed on CDP's corporate guidance page. So I'll now just end with some key dates for reporting in 2020. The questionnaires and preliminary reporting guidance are already available. These were released in December and can be found on our corporate guidance page. The final version of the reporting guidance will be released later this month, along with the 2020 scoring methodologies. And companies requested by investors will also receive their official disclosure request this month. Our online response system will open in the week commencing 13th of April, and companies will need to submit their response by 29th of July. As a reminder, please try to submit early and to ensure to check your response thoroughly before submitting, particularly any information that has been copied forward from previous years. And in the future, CDP is looking into further consolidation of the questionnaires to reduce the reporting effort. And that concludes my part of the webinar. Thank you, and back to David.
Great, thank you, Emily. Thanks so much for taking us through all the changes for 2020. That's very helpful to understand what those changes will be in terms of the specific questions, as well as more broadly. So that's fantastic. Great, so just in the final 10 minutes of today's webinar, we're just going to go through some top tips and some ideas around CDP reporting. There'll be some people that are very familiar with the process and will have it down in terms of doing it year on year. Others may be newer to the CDP reporting process. So we wanted to just pull out some tips and ideas for you to start thinking about some of those areas. So one of the key things with CDP reporting is to think about the inclusion and scope of what you're reporting. And that will obviously differ for each organization, but looking at confirming what the boundary is in terms of what you're including, but also which questionnaires you want to respond to. Today, we've been focusing on the climate change questionnaire, which will be what most responders will be looking at. But as you can see, water and forest are increasing year on year as well. So which questionnaires will you actually be responding to? Once you've looked at that, in terms of looking at your sort of boundary and what's included within that, look at the different key individuals that will then need to be engaged then in terms of helping to provide information or content for the questionnaire response. For more complex organizations that will be looking at collecting those different data sets, I've just put out an example here from the Greenstone Enterprise software, just looking at how you can structure an organization's data sources to be able to calculate particularly carbon emissions, which may be more complex. It might be that you need to include or exclude certain parts of your business to do that for CDP, and that may well be different for other reporting that you're doing to different stakeholder groups. The next key thing is obviously planning your data collection. So first tip is attending today's webinar to understand what the changes are ahead of time and how that might impact last year's reporting or what you need to start if you're looking at things for the first time. In terms of that, it's really important to understand where data needs to come from. So both on the numerical side, so who are going to be the key contacts for providing that carbon information, if that's something that you've not done before, but also the other steps within that process, including the data approval process within there and those that will eventually sign off prior to the submission. In terms of communicating those reporting deadlines, aims, and key milestones, Emily's taken us through what those are from a CDP perspective. So embedding those within your own internal timelines and working back from those to be able to allocate enough time is really essential. And a really important part of that as well is looking at the assurance process. So now more and more organizations are seeking third-party external verification of their carbon data. And with that, there comes an assurance process. We certainly see that with Greenstone clients where they might be using the data from our software and getting a third-party audit of that. So it's important that that time frame is considered to carry out the assurance process prior to a CDP submission so that you are able to achieve those points and disclose robust data. So I've just included another example here, just looking at from the enterprise software, looking at tracking data. So in terms of coverage, but also where data might be waiting for approval or has been rejected by users. So those types of tools can help to manage if you do have a more complex organization that you're reporting for. The third area is I was thinking about calculations and data management. That's something that we do, so that's I'm sort of highlighting that as a key thing to think about. What emission factor sets are you applying? What data sources are you including in your scope 1, 2, 3 reporting, and having visibility and transparency of those to be able to disclose within that. And all of that sits or should sit within a process for data management and storing within there to be able to collect that type of information, giving you sort of flexibility and analytics as well to be able to export that type of information to respond to CDP, but also to communicate to other stakeholders as well. Yes, CDP obviously is extremely important for reporting to investors, but there's also valuable information in there that may be relevant for other people as well. So do consider that in terms of the information that you've gone to the effort to gather. The final tip is really just looking at that quality review prior to submission. So that's both in terms of the qualitative information that you're disclosing, but also on the numerical side. So checking for things like variances within the data and agreeing strategies for data coverage and accuracy. For some organizations, it may be that there's data that needs to be modeled or extrapolated to be able to present a full picture of your carbon emissions. So make sure that you're using clear methodologies for those, and that also you've got plans in place for how that can be improved in the future in terms of the year-on-year side of making improvements for those investors that are relying on this data more and more to be reliable for decision making. So I just included a screenshot here. This is the variance tracker from the Greenstone software, looking at how you can manage that type of information if you have that at scale. As an organization with a few sites, it might be quite simple for you to do that, but for more complex organizations, whether that be geography or structure, then having systems to be able to monitor and manage that and what those variances and classifications are for them becomes essential. Great, so we just wanted to close out today, just pulling out some insights from a first-year reporter. We gathered this information from one of the clients that we were working with who reported for the first time last year, and just some of the tips that they found in terms of looking at what's needed. So some of these I've covered already in terms of looking at realistic timelines and who the senior sign-off would be within the organization. In terms of that modeling, what is the information to estimate any data that you need or put that information within there, and identifying continuous improvements. One of the other areas to think about is initiatives. So a couple of years ago, we built an initiative savings function into the software, and really that was driven from CDP responders who were looking to capture information on initiatives throughout the year. So rather than a once-a-year process of looking at what projects have been put in place and what those savings are, trying to capture those on an ongoing basis to be able to look at progress towards targets. And that's something that generally comes with maturity of responding to CDP over a number of years. Great, so that leaves me just to thank everybody for attending today's webinar, particularly to thank Emily on behalf of CDP for taking us through what the key changes are in this year's questionnaire. We will be putting together an FAQ document, as I said. So we've received some questions through GoToWebinar, but do also feel free to drop us an email either to myself at Greenstone or to respond@cdp.net, referencing today's webinar, and we'll be putting that together to circulate round to today's attendees. So thanks everybody. That leaves me again just to thank Emily and to wish everybody good luck with this year's CDP reporting for 2020.
Thanks, David.
Thanks, bye-bye.